Alrighty. Hi and welcome everyone. Good morning or good afternoon, depending on where you are. Welcome to our webinar series about federal grants management. Glad to see folks hopping on today. We're going to get started with the presentation shortly. But before we do, I want to go over some brief Zoom reminders and introductions. So to start things off, my name is Emery Cowan. I work with the Fire Adapted Communities Learning Network and the Watershed Research and Training Center. And we're super excited to be hosting this webinar series and having the opportunity to feature the amazing experts with Kelley Nonprofit Consulting to talk us through all things grants management. So we'll introduce those folks in a minute, but as an initial session overview, I'll have y'all click the next slide. Oop, maybe I think we're just restarting. So here we go.
I'm sorry, it's not advancing.
Oh no.
Let me just troubleshoot this for one moment.
Okay, yeah, sure thing. We'll just kind of keep to continue on with an overview of the series. This is again a 4-part series that we have happening over the next month or so, every 2 weeks for the next 3 Thursdays. Each session will build upon the other, so hopefully everyone is able to tune into our subsequent sessions as well. Though do want to note that everything will be recorded. Let's see, Kelley, if you want to go back to the series overview. There you go. Perfect. So yeah, we have 4 sessions in total with this series and going to be building upon each other. So hopefully folks are able to tune in to subsequent sessions, but we will be recording all of the sessions and sending them out afterwards. So no worries if you have to miss one or dip out early. Okay, so yeah, as a welcome and just a quick Zoom overview, we just to minimize distractions for our hosts and panelists, we are only allowing attendees to chat to hosts and panelists, and then we will be using the chat box to share resources throughout the presentation. So keep an eye on that for a bunch of great links and resources. We will have the Q&A box activated for folks to drop your questions in there. So feel free to do so at any time throughout the presentation, and then we'll round those up for a Q&A portion at the end. We do have Susie and Damon here who are ASL interpreters. So if that's something that you'd like to access, it's on the bottom bar of your Zoom screen. And that's also where you can find closed captioning. Again, the webinar is being recorded and we'll be sending that out and posting it on our website and YouTube page for folks to reference in the future. Next slide, please. Awesome. So if folks aren't familiar with our organizations, the Watershed Research and Training Center is based in Northern California in Trinity County and works on a host of different projects and efforts related to land stewardship and community development and capacity building at local, state, and regional scales. The Fire Adapted Communities Learning Network is a program of the Watershed Center, and we connect people working on community wildfire preparedness and adaptation and recovery across the country, provide tons of learning opportunities, resources, an online platform for members to connect with each other. So if that's of interest, we're always open to new members. Membership is free for anyone working on community wildfire adaptation. So my colleague Emily is popping some links in the chat box for if you're interested and would like to read more. Next slide, please. So the Watershed Center and FACNet are very excited to be a part of the Community Navigators initiative, and that's kind of where this webinar is coming from. The Navigators initiative is really focused on, it's a Forest Service initiative focused on connecting communities to federal funding partnership opportunities, funding opportunities, programs, et cetera, and really helping folks navigate to those, as well as supporting awardees and effectively implementing federal awards, including things like managing federal funding in effective ways. We also just focus on general capacity building around connecting with federal programs, partnerships, and funding sources, especially those connected to the Bipartisan Infrastructure Law and the Inflation Reduction Act. Just quickly, if we could stay on that slide for one more second, I do want to note that FACNet and the Watershed Center are one of 6 nonprofits that are working with the Navigators Initiative. So folks may be familiar with some of these other nonprofits that are also doing amazing work under this umbrella. And the Forest Service website that Emily popped in the chat box is shares more information about connecting with each of those nonprofits as well. Do want to note that in relation to our work with the Community Navigators Initiative, we are not speaking for or representing the Forest Service. And so just want to underscore with everything that is being shared today that your program manager and your federal funding and award is really the best and most accurate source of information regarding your specific circumstances. Okay, we can transition to the next slide. Awesome. So just wanted to quickly go over some of the resources and offerings that the Watershed Center and FACNet are able to provide thanks to support from the Forest Service through the Community Navigators Initiative. And that includes trainings like this one. We also have a training series that we put on over the summer about Forest Service grants and agreements that provides a great overview of different funding tools and kind of the nuances for how they're used. So that's available on our website, and Emily just put that link on the chat in the chat box. We also have some great offerings related to community wildfire protection plans, and including one session coming up around integrating your CWPP with hazard mitigation plans and other local plans. So something to check out if you're involved with or interested in community wildfire protection plans. Lastly, just want to highlight the fact that we also provide one-on-one support. We have a team of navigators that can help folks with applications, registering for different portals, things like reporting and implementation. So if that's something that's of interest to you or one of your colleagues, feel free to find us through our Watershed Center Community Navigators website. There's a button to click on Request a Navigator or Request Support from a Navigator. Or you can click on the QR code that is on the slide. I think that is it from me. So now I'll hand it off to our amazing presenters, Kyle, Libby, and I think we have Kristen on as well, who are going to introduce themselves and kick the presentation off. Thanks, y'all.
Thank you so much, Emery. Thank you. It's so great to be here. I want to thank the Watershed Research and Training Center for their work as stewards of the land, of course, but also as stewards of connections of people to the land, and really thank them for their partnership and for elevating these not always super exciting, but very necessary topics of grant readiness and compliance and more. And also want to appreciate FACNet and thank the work that they are doing to change people's relationships, communities' relationships with fire, and fire adaptation work is something that's really near and dear to us. We work in several different initiatives to support disaster recovery, resilience, and this is really, really important to us. We know that what they've achieved so far and what they're working towards is no small feat, and it's something that we all need to do together and collaboratively to be successful. So, and also just appreciation for the Community Navigators initiative in general. So I'm Kristen Kelley Monahan, owner of Kelley Nonprofit Consulting, and I want to introduce our team. We have Libby Carter, our Chief Operating Officer and Account Director here today. Kyle Stokely, our Director of Financial Services, who will be leading most of the content today, and also Kelly MacArthur, she's Director of Special Projects and also supporting the tech and slides and some links and such that we have. So we are a team that's been, we're a team of 20 salaried staff members. We also work with a few contractors as well. We have been in business for 20 years, so we celebrating that milestone this year. So 20 for 20. We work on a variety of capacity building and support for direct nonprofit organizations that provide direct services, and also we work with the philanthropic sector and with the public sector too, providing a variety of different capacity and technical support, ranging from strategic planning to financial services to grant compliance to messaging and metrics and evaluation and so much more. So the volume here, just sort of us at a glance, we right now work with about 100, well over 100 actually, nonprofits and jurisdictions that we currently serve in a direct client relationship, and also many others through shorter term one-on-one, TA services. Many of our clients have been with us for 5, 10, 15, 20 years in some cases. So, and we for this slides, Libby and I started to count the number of contracts that we help our various clients manage, and we got through a few clients, and we were at like over 500. And I said, okay, we just need to stop counting. It's getting a little it's getting a little too scary. But what is important about this volume is really that for every contract or application that we're managing or a contract that we're managing, it's really giving us insight and experience into yet another example of what works, what doesn't work, what specific, nuanced problems, concerns in a true array of specializations, ranging from Department of Defense grants to National Endowment for the Arts grants, and of course many USDA grants as well. So where are those, what to do, what not to do, and sort of where is that sneaky hidden button on the online application that's not allowing you to advance to the next page, and other, 1 a.m. frustrating situations. So we hope to really help make federal grants and management and compliance accessible, and to help break down some of the aspects of it, which can seem overwhelming, but it's a lot, but it's certainly manageable, and trainings like these can help. So we work with all sorts of organizations, from small volunteer-led organizations to large foundations with assets in the billions, and team members of 200 plus. So, and we work with those that are brand new to federal funding, and those that are have received and are managing multiple concurrent contracts or grants. So agreements or grants. So just want to share just a few things. We work sort of on both sides of the fence. We work with the recipients of funding. We also work with funders, helping them plan new funding opportunities, helping to bring and elevate funding needs in the community to state agencies, to philanthropic sector, to philanthropy and corporate philanthropy. And we also work at the intersection of support and direct service nonprofits. So by that I mean so a few examples of that is we manage the Federal Readiness and Leverage Fund, and Kelley, hopefully you can put a link in there. That is a fund that it's a collaborative fund. It reduces barriers to federal funds by it's like, what are those aspects? We've been working with hundreds of nonprofits over the years. We've identified, it's matching funds, it's getting pre-development done, it's getting, shovel ready. So what are those seemingly, minor things comparatively, that if we can get those achieved and move past that, we can access potentially millions in federal awards. So it's really that leverage that's needed in the beginning. And it's collaborative, so funders can come together and sort of share that burden for those more um, um, I would say a little bit more risky, investments and support. And then the readiness component is additional compliance and financial support and training to prepare to successfully manage awards. We also manage the Oregon Disaster Funders Network to help activate the philanthropic sector and to coordinate gaps where state and Fed support may not reach. And we also helped launch and manage the Maui Recovery Funders Collaborative, and we manage the Oregon Resilience Stewards and the Oregon Resilience Summit as well, and work with many wildfire and stewardship organizations too, just in a direct client relationship. So really excited to be here today. And if we could move over to, I would also say our team is geographically diverse. We are based across the Pacific West, and we have clients also primarily across the Pacific West, but a few nationally as well. So we try to maintain a sort of equilibrium between rural and urban staff members so that we're representative of the communities that we serve. We also provide a majority of our services in Spanish as well. So I think the next slide, and then I will pass it over to Kyle here after this, is what are today's topics? So we're going to be providing an overview of those common federal grant regulations, uniform guidance, and also what have been the recent changes and updates. There's been some really some exciting, some less so, but some big ones, some big changes to uniform guidance, and we'll highlight some of those more important ones. Share some key definitions that we found relevant to federal grants, and this is something that we crowdsourced among our own team to identify. So, what are the definitions that are important to you in your work in your help, with clients? What are those topics that you think are most important? I'm sorry, for definitions you think are most important and relevant. So. Also understanding the role of federal pass-through and subrecipient entities, some overview of standard forms and the different pathways to arrive at federal funding from the U.S. Forest Service, U.S. Forest Service annual funding opportunities. These are not exhaustive, but just highlighting a few. And providing some key insights on U.S. Forest Service awards as well, and also some tips and tricks along the way. And then also we have some quizzes built in, and yeah, you definitely have the A team here today. With Kyle and Libby. I don't think I passed the quiz entirely, so I'm getting booted off, but Kyle and Libby you're in their very capable hands. So I will pass it over to Kyle to take us from here. And thank you so much for attending. Thanks, Kyle.
Well, thanks so much, Kristen, for the wonderful introduction. Hi, everybody. My name is Kyle. Kristen mentioned I'm the Director of Nonprofit Financial Services here at Kelley Nonprofit. And I just want you to keep in mind during this webinar that we're trying to keep this pretty high level. And there's a lot of factors that are going to influence recommended financial approaches to federal grants management. And so each organization attending this call is probably going to have a unique situation, within their own funding sources. And so just keep that in mind. This is kind of a broad overview. This is meant to be informational. but there's going to be quirks or nuances to everybody's individual award. So yeah, again, the objective, we're going to provide an overview of common federal grant regulations, through the Code of Federal Regulations, definitions, forms, funding opportunities, and a little bit more. It's going to be fun. We're going to try to keep it light, but I don't want to get bogged down in definitions or anything, but we do have to cover some of the basics. So yeah, so I guess first let's start off with the uniform guidance. So this is the federal guidance for managing federal awards, and this can be found in Title II of the Code of Federal Regulations in Section 200. And it's actually a pretty massive document, and there's been some recent updates to it as of October 1st of last year. Some of the ones that we wanted to highlight here. So the de minimis indirect rate was raised from 10 to 15%. So this basically means more money for overhead costs for organizations. So this is great. The single audit threshold. So for organizations that expend $1 million in federal funds during a single fiscal year, they need to have a single audit performed. And that we'll go into more details later, but that's a crucial component because single audits are kind of a different beast from your standard financial audit. And so upping that threshold, it kind of decreases the number of organizations that need to undergo a single audit. Additionally, so equipment capitalization, that threshold has been raised from 5 to 10,000, and then also the sub-award threshold was increased from 25 to now 50,000 when we're calculating modified total direct costs. If we can go to the next slide, thank you. Yeah, so we're going to go through some definitions. So the first thing is direct costs. You're going to hear direct and indirect costs. So direct costs are those that are specifically attributable to your grant-related activities. So these are necessary and allocable to the project that you're undertaking. And then there's indirect costs. These are, you'll often hear overhead or facilities and administrative costs. And so these are necessary to the ongoing operations of the organization, but they're not allocable to a specific grant, or they're not allocable to a specific program to kind of help all the organization in its entirety. Next slide, please. So allocable costs and allowable costs. So we're a little bit of a nuanced distinction here. So allocable costs, these are shared direct, or just direct, or indirect costs that are charged to a federal grant, versus allowable. So it's slightly different. These are costs that are necessary, reasonable, and allocable to a federal award. So we have allocable and allowable, and most costs are going to be both when you're submitting your grant budget. And then there's also disallowed costs. So these are expenses that can't be charged to a federal award. Purchasing alcohol, let's say, right? That's generally not allowed. I don't think that's ever allowed. So, and then there's cost matching and sharing. You'll hear this term a lot. And this is basically just the portion of the project that's not funded by the federal government, by the federal award that you are applying for. One more slide on definitions. So program income. You can hear this in just a nonprofit context. So this is income generated from an organization's nonprofit activities. But in this context for federal grants, this is income generated as a result of the federally funded activity during the performance period. Another definition or another term that we come across that's maybe a little vague for people, question costs. So these are going to be expenses. So if you're undergoing a single audit, these are expenses that are identified by an auditor that are either unreasonable or in violation of a statute or regulation or inadequately documented. So maybe you're not using grant funds to purchase drinks or something, but maybe you charged $1,000 in travel expenses to a grant, and you can only provide receipts for, let's say 200 of them. Well, the $800 undocumented in undocumented expenses, those might be question cost in the auditors in the course of the auditor's work. And then there's this audit findings. So findings kind of has a negative connotation with it. So these are going to be significant deficiencies or material weaknesses in internal control. Or they can be maybe material non-compliance, right? So not immaterial non-compliance. So material non-compliance is the difference between immaterial and material. We're going to discuss that in later sessions. But material non-compliance with federal statutes or regulations, or question costs that are greater than $25,000, I think is generally the threshold. And then, of course, instances of known or likely fraud are going to be findings by the auditor. Okay, so for this, we would like you to either get out a pen and paper or open up a Word document on your computer. So I just want to get your brain working on this. So I'd like to know maybe who's familiar with what modified total direct costs are, and how they're used in indirect cost calculations. So maybe just write down a sentence of basically what are modified total direct costs and how do they factor in to calculating your total indirect cost for a grant. Okay. Or maybe even just think about this one. I think let's go to the next slide. So modified total direct cost, these are going to be multiplied by the indirect cost rate in order to get total indirect costs chargeable to a grant. So it's not all of your direct cost, it's a modified total. So we're excluding certain items. Okay, let's go to the next question. So let's see, get your brains working. Name some common budget categories that are used in the modified total direct cost calculation. So maybe just think, if you've applied for a federal grant in the budget, what are those line items generally that you can include in the modified total direct cost calculation? Okay, hopefully you've come up with some answers. So generally these line items are going to include personnel costs. So these are salary, fringe benefits, travel, supplies, contract labor, up to the first 50,000 of each subaward. All of these are going to be included in the modified total direct cost line. Let's go to the next slide. So now we're going to ask you which costs are excluded specifically from the modified total direct cost calculation. So these are ones that are direct costs, they're allowable. Yeah, so indirect costs. Yep, I'm seeing some responses in the chat. Okay, so let's see, for modified total direct costs, we are going to exclude equipment, construction, rent, tuition scholarships, participant support costs, and then, of course, the portion of each subaward in excess of 50,000. So again, the uniform guidance recent updates upped that from 25,000 to 50,000. But above 50,000, so for each subaward, in excess of 50,000, we're not including that in the modified total direct cost calculation. Okay, so now we've got a bit of an activity for you. We're trying to make this a little bit more interactive because the subject matter is a little bit bland, and so we don't want to bore you. So here's our activity for modified total direct costs, and this might be helpful if you are applying for a federal award in the future. So we've got Max Incorporated. They have budgeted the following costs for a federal award. So we've got 15,000 in salaries and wages, 7,500 for fringe benefits, 1,250 for travel, 170 grand in equipment, and so on. So we would like you to calculate Max Incorporated's modified total direct costs. And then once you've calculated the modified total direct costs, we would like you to calculate the total indirect costs that are chargeable to the grant, given a de minimis rate of 15%. So gets a little bit tricky here. Notice that the $500,000 in subawards, there's 3 total subawards. And so we're going to have to kind of break those down and only include a portion of them in the modified total direct cost calculation. So we'd like you to take a stab at this, get out a calculator, and try to figure this one out. Ooh. Oh my goodness, we already have answers. Yeah, so rent in this example would be the organization's office rent. Yeah. Okay, we'll give you a little bit more time. I've already gotten an answer dropped into the chat. Okay. Let's go to the next slide and let's break this one down. Okay, so the modified total direct costs, we're only going to be including the salaries and wages, the fringe benefits, travel, and $150,000 in subawards. Yeah, participant. So I see there's a question from Lauren. So participant support costs, this is just in general, right? And in prior slides, we saw participant support costs are not included in modified total direct costs. I didn't want to get too much in the weeds. I'm just kind of using the general rules here, and not getting into the details too much. I don't want us to get bogged down. But basically, what we would do is we would identify the direct costs that are included in modified total direct costs, so salaries and wages, fringe benefits, travel, and then $150,000 in subawards. So we had 500,000 in total subawards, but there were 3 different subawards, and so we can only charge, or we can only include the first 50,000 of each. So 50,000 times 3 gives us $150,000 in subawards. In total, we've got 173,000 and $750 in modified total direct cost. Now you take this amount and we're going to multiply it by 15%, which is the indirect cost rate allowed for this grant. So the total per subaward, it doesn't matter what the total per subaward is. So let's just say each subaward was at least 50,000. Then we can only charge up to 50,000 for each of the 3 subawards. And then we take that total, multiply it by 15%, and we get our answer there. But we got a little tip for you. So it's not uncommon for certain budget items, maybe like insurance or unique costs that are kind of included in that other category. That can kind of be a broad category, right? And so it's not uncommon for some of those. Oh, because the audience can't see them. Okay, yes, sorry. So I'm seeing questions coming in through the chat, and I should be reading through those questions. So basically, we had Michael ask that we didn't know the total amount per subaward. So how would you know which ones went up to 50,000? But in that example, as I said, we're assuming each subaward is at least $50,000, and so we can only include that amount in the modified total direct cost calculation. So getting back to this, so some of these budget items are going to be excluded from the modified total direct cost calculation at the request of the awarding agency. And so it's always good to consult the notice of funding opportunity or reaching out to your grants manager at the awarding agency in advance of submitting your application so that you can double check which lines should or shouldn't be included. Okay, and some of the roles of within a federal award. So we have the federal awarding agency, right? So this is the entity that's going to be administering the federal award. We have the recipient, the primary recipient, or sometimes they're called the pass-through entity. So this is the non-federal entity that will be managing the grant and providing subawards to subrecipients. And then, of course, there's the subrecipient, and so they're the ones receiving the subaward from the pass-through entity. And so it's good to keep in mind that the primary, so the pass-through entity has to follow the funding agency's requirements, and any of those rules that apply to the pass-through entity also apply to the subrecipient. And so contractors, they're not bound by those requirements, but the subrecipients are bound by the same requirements as the pass-through entity. And we're going to talk a little bit more about this later on, but it's good to contact the grant officer at the awarding agency if you're unsure what designation a certain recipient is, whether they're a contractor or a subrecipient. And then so here's the distinction. So contractors, this is in general, right? This isn't going to apply for every award, and each awarding agency might have different standards here, but in general, the contractor, these are the ones delivering goods and services independently in the normal course of business, right? And so these services are going to be procured by the grant award recipient, but they don't have to abide by federal standards in general, whereas the subrecipients do have, not federal standards, grant guidelines, right? Whereas subrecipients, they do have to follow grant guidelines, and they're going to be collaborating with the lead applicant directly. But a little tip down there, so during your application development, you can ask your grant manager for clarification to help you determine which one your partnership falls on. So whether this individual or this organization is a contractor or a subrecipient. It's always good to get that clarification before submitting your application. And Libby, if you want to take this one on.
Hi, everyone. So just a couple quick reminders. If you have questions, feel free to put them in the Q&A box, and we have at least 20 to 30 minutes or so at the end of this to go through questions, so we should have plenty of time. And yeah, so we'll be capturing those and being sure to answer those at the end. And again, I'm Libby Carter, and I know this is my first time speaking, so just wanted to reintroduce myself. I work with Kelley Nonprofit Consulting as Chief Operating Officer, and work with a lot of different groups. And my perspective is more from the grant writing side and support for compliance, ongoing compliance after grants are awarded. So also, these slides are going to be available as a resource after this. So this slide and the next slide have a couple of, show kind of the flow of how things work with the U.S. Forest Service and other related agencies. So kind of good to have to reference back to. So this is kind of a quick overview of USDA versus U.S. Forest Service. So they're of course connected. USDA oversees farming, livestock, agricultural trade, and food safety. U.S. Forest Service manages public lands and supports forestry initiatives. Cooperative Forestry Unit collaborates on forest management. And again, underneath here, there's kind of a flow of, how information works and how these different agencies are connected to one another. This is a good quick overview of the National Forest System and how information kind of flows. For most groups, when you're applying for an opportunity or when you have an opportunity that's been awarded and you're either working toward getting your contract finalized and signed or your agreement finalized and signed, you would mostly be working with your regional office. There may be a couple, levels within regional offices. There may be a couple of different contacts that you're working with for different stages of this part of the process, but just making sure that who is at your regional office can be really, really helpful, both when you're applying and when you are working toward having a signed contract. And then, of course, during implementation, having close contact with your grant manager is key. Some of the funding pathways, so the three main pathways, we have grants and cooperative agreements, partnership agreements, and contracts. I think, we have a little bit of a mix of participants on this call. So some people are looking to apply for federal funding from U.S. Forest Service or other agencies potentially for the first time. Others on this call have several grants and are managing them. So many of you probably are already in sam.gov, but if you're looking to apply for the first time, we recommend doing that well in advance of the deadline. You know, as soon as possible when you know you're going to apply, or even if you're just exploring the idea of applying, it's good to get set up in sam.gov because it can, you know, sometimes take a little bit of time to go through those questions, go through the registration process, and make sure you have everything in place. And there is a Forest Service Grants and Agreements 101 training that Watershed did previously that is still available online as a resource. So that link is in the chat, but it's also going to be a clickable link in the slides when they're sent out as a resource to everyone. So keep an eye out for that if that's a topic that you're interested in learning more about. And then grants versus cooperative agreements, some of the differences here. So for grants, recipient operates independently, but still must follow federal guidelines. Independently, meaning that there is maybe a little bit less collaboration with the agency than there might be for a cooperative agreement. So cooperative agreement, there is additional collaboration partnership with the agency to achieve shared goals. But I do want to note that, you know, each agency may apply these terms a little bit differently. So you want to work really closely with your grant manager from the start to understand your role in either a grant or cooperative agreement or any other type of funding agreement, and their role. So, you know, what are their expectations? What will they be providing you with? Making sure you understand that from the beginning is very important because across federal agencies, there is some nuance in how these two types of agreements will operate. And then this next piece, so sometimes grants and cooperative agreements can result in an organization generating program service revenue. This is a pretty unique situation, but during our registration poll, this was a specific question asked by someone. So we're trying to fit in as many, you know, of the pre-questions that were sent in as possible. And this is, you know, kind of an interesting situation that others may run into as well. So Kyle's going to share a little bit more about that piece.
Absolutely. Yeah, so the question that came in was, can program income earned while under a grant or cooperative agreement be counted toward an organization's resource contributions for the same award? So you're awarded some money from the federal government, and that money is going towards maybe a certain program that you're carrying out, and that program just so happens to generate some revenue. And so basically, what's the treatment of that revenue by the organization is the question. So if we could go to the next slide. So this is in section 200 and part 307 of the Code of Federal Regulations. So basically the answer is yes. So you can use you can apply program income in 3 different ways. So one of 3 ways. So you can apply it as a deduction where the total income is going to reduce total allowable costs, which by extension reduces the total grant award. Or you can count that program service revenue as an addition, and that income is going to increase the total allowable cost and by extension the total grant award. And then the third option is you can count that program service revenue as cost sharing, where the program income is used to meet matching requirements, and we referred to matching or cost sharing or matching in prior slides. So this is going to be used as a cost sharing component in the federal award. But if you're unsure which option applies to your award, if you're planning or you're anticipating on earning program service revenue, and you don't know which option applies to your award, it's best to consult the grant agreement or the notice of funding opportunity or a point of contact at the awarding agency. And I'll pass it to Libby for this one. Libby, I think you're on mute.
Thanks, Kyle. So as I was mentioning before, relationships are really key to this process. Relationships with your regional contacts at U.S. Forest Service or whichever federal agency that you're working with. So, being prepared, I always, when I'm working with a group, I say, try to make your contact your best friend. If they write you an email, respond as quickly as possible, even if it's just, thank you, I received your email, we are working on this, and we'll, get the information back to you as soon as possible. Can go a really long way in kind of building that relationship. So especially during the kind of interim period between when an agreement is awarded and when your contract is signed, there's going to be a lot of back and forth communication with whoever is assigned to either your region or to your specific grant. That will be different depending on which agency you're working with or which funding opportunity you've been awarded. So usually there is, so if they send you a request, usually there's a time-based component. So they may say, I need this budget modification within 5 days, for example. So keeping an eye out for those types of communications is really important throughout the life of your grant, but also especially during that kind of interim period before the contract is signed. Also, so staying on top of your own accounting, if you have subrecipients or subawards as part of your budget or as part of your award, making sure to set really clear expectations with those subrecipients at the onset of your award, creating agreements with those subrecipients that pull from language from the uniform guidance, making sure to have regular check-ins with those subrecipients is really very important. And then a quick tip related to this as well. So being prepared for an extended timeline. I'm sure that those on this call who have received federal funding in the past or are trying to get a contract signed right now for federal funding are experiencing this, but we are seeing timelines from award to contract signing of, I've seen it 3 months, which is very quick. I've also seen it a year and beyond between the announcement of your award and the actual signing of the contract. There are a lot of variables that go into that, but I would just be prepared that can happen, so that you, one, don't begin spending on your award before you're able to be reimbursed for that. And then also just in your operating budget, if this is an important piece of what you'll need to have for expenses for either the current year or the following year, just trying to build in a little bit of extra time because there's just a lot of moving pieces when we're talking about federal funding. Getting started with U.S. Forest Service funding. So you can schedule a consultation via fsusda.gov. These consultations are free with Forest Service grants and agreements experts. They can help talk about, if you have a project in mind, if they, think that is a fit. They can talk about potential expenses, whether those may be allowable. They may be a little bit limited in how definitive they're able to be, but they can give you some resources and guidelines to work within and some additional information. So for any groups that are looking to apply, we really strongly recommend setting up that consultation, which again is free to do. Also attending the Forest Service Grants and Agreements 101 webinars from Watershed are a very, very helpful resource. That those resources are in the chat, and I believe we'll also send out links to those for participants after this session too. And I'll pass it to
Okay.
Kyle to talk about SF 424A, which is always the fun one.
Thanks, Livy. Yeah, standard form 424A, this is a standard government form used across all federal departments. It's designed so that an application can be made for funds from one or more grant programs. And usually you're going to submit the 424A, which is basically a general budget outline, plus a very detailed project budget when you're applying for a federal award. So here's some of the high level cost categories contained within the 424A. So we're going to have personnel, and we've already discussed these in prior slides. So personnel, so these are again salaries, time allocations attributable to a salaried individual's pay. So basically, if you have if you have an employee working on a federal grant, the portion of their time that is spent on grant-related activities is going to be allocated to this line. And then again, the fringe benefits, so health insurance, retirement, FICA, and so on. And then we have travel, equipment, supplies, and then contract services. And then we have other, and this is also going to include pass-through awards. We also have, I think there's a column in 424A with the unobligated federal funds balance. So this is basically federal funds still available for use from a prior period. And so this is only going to be applicable to continuing applications and not new ones. And it often doesn't come up as a very common thing for organizations receiving federal funding, but it might apply to you. But it's worth keeping in mind that all these standard forms, they have detailed instructions online. All you have to do is Google, SF424A instructions. They have pretty detailed instructions available online, and you can search for guidance documents on grants.gov as well. But it's important to always check the document expiration date. I think there's one available online, and it says it's good through, I think, February 2025. It doesn't necessarily mean that the next iteration is going to be all that different. But just keep that in mind that you have the most current version. A lot of times, organizations might download these forms and keep them, in Google Drive or elsewhere, and they'll refer back to them months later, and maybe that form has changed slightly. So it's good to have the most recently updated form available when you're going to apply for a grant. Okay, so we've got a bit of a quiz for you. We want to encourage involvement here and participation. And so this is going to be a direct versus indirect cost activity, and we're asking you to identify whether the costs are direct, indirect, or maybe a little bit of both. Yeah. So
I'll go
I
ahead
think
and
there's.
launch it then, Kyle.
Sorry, what was that?
I'll go ahead and launch it then.
Yes, please.
Okay.
Okay, and we'll give you a couple of minutes to go through these. No pressure. Answer to the best of your knowledge, and then we'll go over the answers. This is great to see a lot of participation here. We've got about a third answered so far. Give you a couple more minutes on this. Yeah, so question 5 is a follow-up from question 4. Apologies if that's not clear here. But I see we've gotten most participants responded to this poll. So I'll give you just a few more seconds to finish up, and we will go through the answers. Okay. All right, so let's start because we're running low on time. So question 1, so we've got fringe benefits, and we did pretty well on this actually, looking at the results here. So fringe benefits of employees who spend all their time on a federally funded program. So this is going to be considered a direct cost, right? It's necessary and reasonable to carrying out the program's goals, the federally funded program's goals, and so it will be counted as a direct cost. This next one, salaries of clerical personnel who perform administrative functions. So these are necessary to the ongoing operations of the organization as a whole, but these would be considered overhead, right? So these are indirect costs. But now let's say those clerical personnel spend half their time supporting program-related activities, and the other half on general administrative functions. Well, in that case, and most of you answered this correctly, we're going to split it between direct and indirect. And so we would have 50% going towards direct cost attributable to the grant, and then 50% indirect that will be included in the indirect portion, but not in any of the direct line items. And next one, so this is a little trickier, capital expenditures to be used for programmatic activities. So these are going to be direct costs, right? And after that, and a majority of us got that one. But the next one, so will this be included in total indirect cost calculation? Now, if you recall, modified total direct costs do not include equipment, construction, or other capital expenditures. And so those will actually not be included in the indirect cost calculation, even though they are a direct cost. This next one, so depreciation expense on common area leasehold improvements for leased office space, a quarter of which is reserved for programmatic activities and 75% of which for administrative functions. And so in this case, we would be splitting this between direct and indirect, right? Because we have a quarter of it is allocable to the program, but the other 3/4 of it is not. And so that would be an indirect cost, whereas the 25% is direct. And then this is one, if you are part of a nonprofit, you'll come across fundraising expenses. And so fundraising materials used to solicit donations to support an organization's programs. Even though you're supporting the organization's programs, the fundraising expense itself is still an indirect cost because it is not allocable to the grant. Okay, so that was fun. Hope you enjoyed that one. And we are going to move on now. Kelley, are you able to advance the slides?
No, I think the poll threw off my sharing, so I'm gonna reshare one.
Okay.
Sorry about that. Okay.
Okay. And finally, we are going to briefly discuss negotiated indirect cost rates. So we just went over some examples of direct and indirect costs, and now you'll hear so it's NICRA, or Negotiated Indirect Cost Rate Agreement. This is going to be negotiated with your cognizant agency. And basically what it's meant to do is it's going to help your organization defray overhead costs beyond the de minimis. So a lot of times, the default is the de minimis, right? But if you want to charge more than 15% in indirect costs to a grant, you're going to need to negotiate your own indirect cost rate. And so this is really important for organizations that receive a majority of their funding from federal sources. Organizations that don't receive very much funding from federal sources, or if it's not a very large proportion of their annual budget, it might not be the most helpful to negotiate an indirect cost rate. But it really depends on your organization and how much in overhead cost you think you can get away with, or that you can charge to a grant award. And it's just worth keeping in mind that the negotiated indirect cost rate agreement is a very lengthy application process. So as I said, it's going to be with your cognizant agency. So that's the agency that's going to provide the majority of your federal funding, or the most federal funding. And within this process, you're going to have to carry out a cost study. And so you're going to identify direct and indirect costs. And then you submit that, the cognizant agency is going to request a lot of different schedules, or maybe audit reports from the past couple of years, other supporting documents, in order to help corroborate the numbers that you arrived at in your cost study. And so, as I said, make sure obtaining a negotiated indirect rate is preferable to using the de minimis before you start the application. It's because, if federal funding only comprises a small portion of your budget, then the difference between the de minimis rate and a negotiated rate might not be all that much, and it might not be worth your employees' time and effort to complete a cost study and successfully negotiate an indirect rate. And with that, I think I'm going to hand it over to Libby for this next one.
Libby, can you share the slides? Mine are freezing. I'm sorry.
Yep.
Okay.
Okay. So sharing just a few of U.S. Forest Service annual funding opportunities. We have the Community Wildfire Defense Grants, up to $250,000 for Community Wildfire Protection Plan developments or updates, up to $10 million for Wildfire Risk Reduction Project implementation. Urban and community forestry, variable amounts available through state and partner programs. We have the Wood Innovations, which is Wood Innovations Grant, Community Wood Grant, Wood Products Infrastructure Assistance, $300,000 to $1 million. Forest Legacy Program, $1 to $20 million, and Community Forest and Open Space Program, $600,000 maximum. This is just a handful of opportunities that may be available either now or in upcoming years through the USDA and U.S. Forest Service. It's not comprehensive, so we strongly recommend, taking a look at what's available on grants.gov, on the agency websites, and signing up for any listservs that may be available to help keep you updated on potential opportunities. And just a final note before we head into the Q&A portion. So we, as part of this 4-part series, there will be some one-on-one sessions with our team available to answer additional questions, talk through more specific scenarios. So, and for us to give advice on those. This information in this presentation is pretty high level, pretty general. We wanted it to make it as applicable as possible to as many groups as possible. But of course, there are exceptions to certain guidelines. There are sometimes when an opportunity is introduced, the legislation that is paired with that funding opportunity may make it so that there are exceptions to the uniform guidance or changes. Of course, the uniform guidance is, what you want to follow first and foremost. But always, keeping an eye out for some of those exceptions that can come along. So the sessions will be 1 hour. Space will be very limited, and Watershed staff will reach out if you have been selected. So there will be a form for you to fill out if you're interested. That form will come via email from Watershed, at some point during this 4-part session. And so, yeah, we would love to meet some of you and talk through some of your questions. And Emery, should we go to the Q&A, or do you want to talk about anything else before the Q&A?
Yeah, let's feel free to just transition into Q&A, and then we'll bring up those final slides right at the end.
Perfect. Okay. So going through some of the questions we've received, could you give an example each of what would be considered a questioned cost and what would be considered an audit finding? So Kyle, can you give a couple examples there?
Yeah, so a question cost. This could be really anything. It could just, the auditor comes across, maybe there's just some unreasonable purchases, right? Maybe the grant funded attending a conference of some sort, some training, and you booked a room at the Ritz-Carlton, right? Or you're flying first class to a city. That might be considered, they might consider that unreasonable. If you can't justify why you're making a purchase, and if you can't justify that it's necessary and reasonable to carrying out the grant program, then then it's probably going to be questioned. And then what would be considered an audit finding? So these are going to be a little bit more of a threshold here. It's a higher bar. So a finding, it could be a question cost that is considered material to your books, right? So this isn't just like you spent, $400 to upgrade your seats on a plane. This is like, you took a big group of people out to dinner, and it was extravagant and exorbitant, and you charged thousands and thousands of dollars to the grant award for that dinner, and that doesn't seem reasonable, and it seems like an abuse, right? It seems very wasteful. So that would be an example of something that might be an audit finding in the course of having a single audit.
And I do want to note too that an auditor may have suggestions for how you might strengthen your financial policies and procedures to better meet best practices. That's not necessarily an official finding. So just making sure that if and when you have an audit performed and they have any type of feedback, whether it's an official finding or some suggestions that are in your audit, just making sure that you understand, where they're kind of coming from for those pieces, and you have all the information that you need for that. Next question, has the change for the total billable indirect on contractors changed to 50,000 or just subawards?
So this is only going to apply to subawards. Contractors are going to be included, and so I guess you have to make sure that you know who's a contractor and who is a subrecipient. And if you're sure that this award you're giving out is in fact a subaward and not payment for services from a contractor, then in that case, the first 50,000 will be included in the modified total direct cost calculation. But above 50,000, again, that's not going to be included.
When did the new $50,000 modified total direct cost ceiling for subawardees take effect? Our government contact is telling us just yesterday that the subawardee ceiling for modified total direct cost is 25,000. Kyle, I have maybe some stuff to share, but if you want to share first.
Yeah. I mean, I guess sometimes it depends. Maybe the program was started before the new uniform guidance took effect. And so in that case, the old thresholds would apply.
Yeah, it should have taken effect in October, but it depends if the legislation that is leading to this available funding was prior to this took effect. So just like what Kyle said, and there is some flexibility across agency to agency of how they want to apply these updates depending on when their funding became available. So that may be that your contact for that specific award, that previous guidelines may still apply to your award. How is program income treated if it goes to a subawardee during the award period?
So this is a kind of a tricky one, really getting in the weeds here. So I guess the best answer is it depends. That program income, it might go toward defraying the total subaward amount, or it might be returned to the pass-through entity to be used for program expenditures, or it could be treated in some other way. With a question like that, I mean, that is a very specific question. I think it would be best to consult the grant manager at your awarding agency. Because it is a little bit complex, it can get tricky, and it also could be a judgment call. So yeah, that's something that it would be worth your time to ask the grant manager at the awarding agency.
And someone asked, will we be covering prevailing wage requirements? That is not a topic for this webinar. We may cover it in a previous one. And I just going back, or we may cover it in an upcoming session, is what I meant to say. The Forest Service, this is from the chat. The Forest Service recently told our organization that contractors cannot be included in modified direct costs. Does it vary by type of agreement with the Forest Service? I would say yes, there is kind of an overarching guidance, but any agreement or any agency can have nuance in how they're calculating some of these things. So using uniform guidance as a best practice to always kind of fall back on, but making sure you're having this close communication with your grant manager, with your contacts at the agency to double check. And most of the time in the period between when an award is received and when you're signing your contract or signing your agreement, there's going to be a chance for budget modifications. So, that might be something that you learned during that budget modification piece too. But hopefully those types of exclusions or differences are clear in the solicitation. Is the $10,000 equipment the total cost for all equipment or cost per piece of equipment?
So this one's going to be a cost per item basis. So let's just say you purchase 10 pieces of equipment valued at $1,000 each. Those would generally be put under supplies expense. It's if the individual piece of equipment is going to be costing you more than or $10,000 or more, is when it will be included in that equipment line item versus supplies or other.
Another question, do you mind sharing those quiz questions and the correct answers with the links and recording? Yeah, not at all. We can include those. We can provide those to Watershed to send out with the materials. If you receive a negotiated indirect cost agreement, so a NICRA, do modified total direct cost rules still apply to what that new NICRA is?
So in this case, I mean, a lot of times in accounting, the answer is it depends, and that would be the same for this question. So generally, a negotiated indirect cost rate agreement will specify that the negotiated rate can only be applied to certain budget categories. So I've seen it applied only to personnel and fringe benefits, or it might apply to personnel, fringe benefits, and travel cost or supplies cost. So it not necessarily, it might be the standard modified total direct cost items, or it might be applied to only specific items or budget categories.
Yeah. Additionally, there may be specific opportunities where you can still apply your NICRA, but you can only apply it up to a certain percentage of your award amount. So it's, you know, even though you're still using your NICRA, you may not get as much indirect as you would for a different opportunity where it's not capped. If the contracted service entity is also purchasing all of the materials for a construction project, do the costs of the materials still remain in the contractor category? i.e., the applicant will not purchase any materials themselves.
So in this case, I guess the answer would be yes. So the cost of materials would still remain in the contractor category because you're paying the contractor to complete a project, right? And they're going to take that money and they're going to, you know, do what they want with it basically to finish the project. So they're going to pay for parts and labor and material and this and that. But that total amount that you're paying them, the amount that they're invoicing you basically, is the contractor, the services component there. And you know, so the organization, so you as the grant award recipient, you're not itemizing each of the contractor's individual costs, right? So you're not saying I'm paying so and so for screws and a wrench and right and lumber and all that. No, I'm just paying them to build me this, right? And so there's this is that total amount is going to be included in the contractor line. We're not going to be like breaking out the equipment that they're purchasing and so on.
Are there companies, maybe Kelley NPC, that can help organizations through the NICRA process? Average cost for these kinds of assistance services? I would say there are. They would be usually more financially focused groups. And the cost, it's tough to give a range because it depends on the region where you're at, and if the group is local or a national group, they're going to have different rates for different places in the country, just depending on the cost of living. And each time that, like each group that wants to apply for a NICRA will have different considerations with their operational budget and will be at different places. So if you're if you have a really strong financial team that's able to gather the information, all the information that they need in a timely way, then it may be less expensive than for a group that doesn't have any of this kind of ready to go for that contractor. I would say when you're talking about this is just more of a general statement for contractors that work on like federal opportunities or related to federal like items. Just be cautious with who you're working with, because there are groups that maybe like are not actual groups and that try to, you know, get information from your organization. So just making sure that who you're talking with, if you're looking for someone like this, that they are a legitimate agency offering these services. So getting references is always a good, you know, good way to do that, and making sure that they have an actual website, all of those things. Let's see here. Okay, we have a few more minutes. Can you provide the CFR reference about the modified total direct indirect recovery?
Off the top of my head, no. I mean, we could find it. I mean, the best way to figure that out is you can actually, I mean, just look up that, you know, search that in Google and search the Uniform Guidance or Code of Federal Regulations, one of those keywords, and it should direct you to that section of the code. But yeah, again, you know, the Uniform Guidance is very, very lengthy, and so to memorize every single part of it would be a tall order, to say the least.
Should we consider every type of government funds income when we are trying to figure out the single audit threshold? Should we include direct grant money awarded as a sub-awardee, and or collaborative agreement money? So yes, every type of government funds would be included towards your threshold. And if you also have state contracts, keep a close eye on where that funding is coming from, because if the state is acting as a pass-through for federal, that information should be disclosed in your agreement with the state, and that also counts toward your threshold. So, and it's not money awarded necessarily, it's money spent in a given fiscal year. So if you have a $5 million award that spans 3 years, you wouldn't count that 5 million in the year that it's awarded. You would count it in the year that it's spent.
That's a great distinction there, Libby. Yeah, so it's $1 million in federal money spent, so expended in the year. And so even if you're receiving a grant of $1 million, if you don't spend any of it, you know, there's no income recognized and there's no expenses recognized associated with that award. And so you would not be, you know, at risk of exceeding that single audit threshold.
I've seen a couple of people ask about master agreements / supplemental agreements in place with the U.S. Forest Service. I would say that check in with your contact for your agreement. They're going to be able to give you the most accurate information. And just your quick reminder that you know, this webinar is informational. We're not, you know, representatives from the U.S. Forest Service. We're speaking from a perspective of, you know, working on many federal applications over years. But I would definitely, for that specific of a question, check in with your main contact for that agreement, and they should be able to give you some additional information or resources. Just looking at the time, we have a couple more minutes. We'll try to get to as many questions as possible. Let's see here. what guidance can you provide for the following scenario? Subrecipients who do not have an existing NICRA want to receive the new 15% de minimis rate, but the prime award NOFO they applied for locks them in at a 10% de minimis rate. The subrecipient requests a NICRA for 15% de minimis from the federal agency, but the agency will not provide it since the 15% de minimis rate is currently in effect for other prime awards. So this is one of those where that federal agency is going to, kind of have that final say. If you have other funding that you're going to be applying for, federal funding, it may still be a good idea to get that NICRA so that it can apply to future funding. But for a specific award, if the agency that you're receiving the funding from is not allowing that, then I don't think that there, is a workaround for that, unfortunately. But definitely if you have other opportunities coming up, it may be worthwhile to still apply for that NICRA. I will say most of the negotiated rates I've seen are higher than 15%. Normally I've seen as high as like 49%. So for 15%, you probably wouldn't need to apply for a NICRA if that's what you're looking for anyway, because that's going to be the new rate moving forward. So I hope that answers your question. I know that's a very specific scenario. Kyle, do you have anything else to add for that?
No, but just keeping in mind, the de minimis is the minimum, right? And so, yeah, the negotiated indirect rate would almost always be higher than that. I don't really know of very many nonprofits, at least, that have overhead rates below 10 or 15%. I mean, it's very rare that you're spending 100% of all of your resources on program-related activities.
Do indirect costs recovered count toward the single audit threshold? It's not technically an expenditure on your books. I have some thoughts on that, but I don't know if you do, Kyle.
Ooh, that's a tricky one. Why don't you take a stab at it, Libby?
Yeah, so usually it's any income, like federal income. So if you're getting that indirect as income into your agency, it would be counted toward that threshold. But, most of the time your indirect amount is not going to be the tipping point for whether you have to do that single audit or not. Since it's, that's a very kind of specific scenario, but I would say yes, you should count any federal income toward that threshold. So any money spent, or maybe a better way to say it is any money received, in your account essentially from the federal government in a year would count. So yes. And I'm going to pass it. I know we have like 1 minute left. I'm going to pass it back to Emery to give the outro, and thanks everyone for your time.
Wonderful. Thanks so very much, Libby and Kyle, for going through all of those questions. That was a lot, and we will obviously be sure to have all of that recorded and sent out to everyone after this webinar. So thank you for the great questions. Just as a quick preview for what's coming up next, we have our next session coming up on January 23rd, and then subsequent Thursdays after that. Again, you can use the same link to log on, and we'll have the Kelley Nonprofit team coming back just to keep building on this excellent knowledge. So if we could go to the next slide, we'll just leave you all with, again, a chance to connect with FACnet or our Community Navigators initiative, We would love to hear from you, love to hear how the webinar, you like the webinar. We'll be sending out a post-webinar survey, and hopefully we'll just see everyone at the next webinar. Thank you so much. I think I'm gonna shut it down. Thanks, y'all, and we will be in touch for kind of a quick recap sometime just via email in the coming days.
Sounds great. Thank
All right.
you.
Thank you.
Bye.